Welcome, everyone. Thank you for joining us, many from different time zones. I'm Lian Liu, a faculty member of Georgia State University's CIBER, Center for International Business Education and Research in Atlanta, Georgia. We come to you on behalf of the MSI CIBER Consortium that are sponsoring, organizing, and running this webinar series. Since April 2020, we have had over 55 webinars with more than 10,000 participants covering topics on research, teaching, and hot topics featuring talented scholars and business executives like today's very distinguished panel. If this is your first time, welcome. These webinars are being recorded. You can find previous sessions on our GSU-CIBER website or our YouTube channel. When you exit this session at the end, you will be directed to a brief survey of 5 questions. Please respond and give us your feedback, ideas for future topics. Everyone except the panelists are muted. Please use the Q&A button for questions for the panelists and use the chat function for the questions for our team, and we will respond. Today, we are thrilled to collaborate with Global Atlanta, a strategic partner of GSU-CIBER. Global Atlanta is a digital public square of our city and state for all things international. Its managing editor, Trevor Williams, is a local celebrity, outstanding writer and journalist who really doesn't need an introduction. Thank you, Trevor, for moderating today's very important and timely discussion on how supply chain finance unlocks global growth. With that, I'll now turn over to Trevor.
Thank you, Leanne. I really appreciate that much too kind introduction, and thank you to all our panelists for joining us. Again, I'm Trevor Williams with Global Atlanta. If you don't know about us, just a brief commercial. We are a news service that covers international business, education, and culture here in Atlanta, showing how Atlanta connects with the rest of the world and how the global economy affects our city. And I think that's perfectly aligns with the topic that we're going to be talking about today. Each of our speakers is a leader in the industry of supply chain finance and the overlapping disciplines of fintech and logistics. And I wanted to bring in someone who knows a lot more about that than me to kind of set the stage for us. I'm asking Ben Harris, who's the Director of Supply Chain, Bioscience, and Advanced Manufacturing at the Metro Atlanta Chamber, to provide us some kind of opening remarks and kind of set the stage for our discussion. So Ben, thanks for joining us.
Yeah, no, thank you, Trevor. Really appreciate the opportunity. And good morning and welcome to our guest here. It is great to be here this morning. It is Innovation Week, actually here in Atlanta this week. So it's actually day 2 of Venture Atlanta. If you've not been able to get down there, I encourage you to do so. It's a phenomenal week here. We've had lots of different events. I'm sure you've seen a lot of things within the news and so forth about all the events this week. So just a phenomenal week for our entrepreneurial community here in Atlanta. But particularly, I'm excited about this conversation this morning as the subject matter, to your point, Trevor, is so timely with what's going on in the world right now. I have been in and around supply chain and logistics for my entire career, and I don't think I've ever seen the space this hot, this white hot, given the situation for the past 20 months. I'd say now more than ever, supply chain, speed, and finance are really at the forefront of the business world. And you can look no further than the cargo ships sitting idle, waiting to unload at our ports, and understand that many of the manufacturers, retailers, and wholesalers won't realize that revenue until it actually hits their doors. So this is a huge problem that is only compounded by the complexity of products worldwide. So I'd say additionally, think about the logistics and warehousing sector downstream also, and the number of payments that transact with net 30 and upwards of net 90 days. That is entirely too long for small to medium-sized enterprises to get paid to sustain their growth. So I'd say, especially given that there is a major labor shortage in addition to this within the sector, and about only 85% of warehouse operations have no automation in their operations. That includes finance in many, many cases. So the good news is we have some amazing executives here today to talk about the real solutions to these problems and many others that are plaguing businesses of all sizes. And I'm lucky enough to have worked extensively with some of the executives that we're going to talk to here today. So without further ado, I'll turn it back over to you, Trevor, to further set the stage and kind of introduce our amazing panel we have this morning.
No, thank you so much, Ben. That was really great. I want to jump right in. I'm not going to read full bios here, but I am going to give you a little taste of our panel and their history. As Ben mentioned, all of the, like I said, leaders in the field. We've got PJ Bain, who's the CEO of Prime Revenue. And PJ, Prime Revenue is an Atlanta-based fintech providing B2B payments and working capital solutions to 30,000 companies across 85 countries, which is pretty amazing. PJ's got a history in enterprise software, supply chain. It goes way back, and we're gonna ask Rebecca of the cyber team to put the link to all the bios in the chat function, so we don't spend all of our time introducing our illustrious panelists. We also have Jack Pierce, who's the co-founder and CFO of Wayflyer. Jack describes himself, I think, as a recovering venture capitalist, having worked in both San Francisco and Dublin. Jack's from Ireland. He manages all things finance and accounting at Wayflyer. Before that, he was with PwC and Highway 1, and is a graduate of University College Dublin and is a new Atlantan. Welcome, Jack. And last but not least, we have Robin Gregg, who's the CEO of RoadSync. RoadSync is a digital platform powering business transactions in the logistics industry. I like that very succinct, to the point description. Robin has more than 15 years of experience building and launching financial solutions for consumers and businesses. Before RoadSync, she was at FleetCor, which anybody in the fintech industry in Atlanta should know. A large company that does fuel cards and other payment solutions. She was with Revolution Money, and before that, Capital One. And yeah, so we're just going to jump in, and I'm going to ask each of you, tell us a little bit more, maybe starting with Robin, since I ended up with you. Tell us a little bit more about your business, and particularly in the context of this conversation, to Ben's point, what is it about, what was lacking in the industry that, the supply chain sector that spurred the solution that your company came up with? Robin?
Yeah, no, thanks for having me. And it's really great to be on the panel with everyone. So what we are focused on is, for truckers and in the transportation industry, pretty much every load and delivery is a business trip. And there are a lot of routine business expenses that are attached to it. So drivers have to pay to have their vehicle unloaded. They might have to pay to have their vehicle repaired. And all of these are very expensive transactions that had been historically largely done in paper. And so if you are, transacting with someone using a paper check and getting a paper invoice, all of that is very slow and cumbersome. And oftentimes drivers could not get back on the road until these financial transactions were conducted. And so that creates a lot of friction in the industry, at places like grocery distribution centers, at, repair facilities. And it's really at odds with an industry that is perpetually cash strapped and really needs to get drivers back on the road and maximize driver drive time. So what we do is we automate those transactions. So we automate the routine business expenses that occur in the industry. We make it a digital invoice, a digital payment transaction. We actually partner with the major fuel card and fleet check companies like EFS and Comdata to power those solutions, and really are just making the ecosystem work better, faster, and getting those drivers paid and back on the road again.
Great, thank you so much.
Sure.
Jack, how do you remove friction from the e-commerce side of things?
Sure, yeah. So in Wayflyer, we finance e-commerce businesses all around the world. And we also provide a free marketing analytics product to all of them to help them improve their performance online. Most e-commerce businesses buy their product from China typically, or somewhere over in the Far East, as we call it. But and they use us to spread that upfront cost of the inventory over a number of months. So instead of constantly having this upfront cost, they can spread it out over time. I think this isn't necessarily anything new. People have been doing inventory financing and providing working capital for decades now at this stage. But the big difference between us and probably traditional providers is they're always looking at the inventory and assessing the value of the inventory. whereas we're trying to plug directly into the company's marketing platforms to assess how well can they sell. And what we're obsessed with is finding companies that can sell profitably and are ultimately good marketers. When you could have 3 e-commerce businesses selling literally the exact same product, and the performance will be drastically different. And that allows us to be really, really quick. So instead of taking a couple of weeks, we can provide financing in a couple of hours.
And the financing is not interest-based, it's fee-based, and it's based on their revenues and how the revenues are growing, right?
Exactly. So I think probably at the moment more than ever, and this just by chance, we're looking at their sales, and ultimately we're collecting out their sales. We're trying to match up their sales when they generate cash, but when they're going to make payments. So they're paying us back every day as a percentage of their sales. And the nice thing about that is where you've got a delay in shipment, maybe you're out of your top selling product, you won't have any payments to us during those period of times. If you're not generating sales, you're not going to pay us. And so it's probably more useful now than ever with just those delays happening. If you're out for a couple of months, at least you don't have these payments coming in that are going to ultimately create issues for you. So,
kind of puts you on the same team in a way, which is kind of nice. PJ, can you tell us a bit about Prime Revenue? I mean, you've been around the block here in Atlanta for quite a while. It's I should know that everybody here is on a real fast upward trajectory. Robin, I think you just raised $30 million, if that's right. Jack and Wayflyer just raised, I think, 76 million, which kind of precipitated the move to Atlanta, where I think you've hired over 50 or plan to hire over 50 people in the next year or so. And then PJ, you're the more established player here, but definitely Prime Revenue's on a growth path as well. Tell us more about it.
Yeah, so thanks, Trevor. It's a pleasure to be with everybody here today. Prime Revenue's mission is to accelerate global commerce by streamlining B2B payments. I think Jack made a really important comment that probably would be applicable for Robin, Jack, myself, and probably every other business. What we're doing is not completely new. There's been different ways of doing it in the past. But at the end of the day, what we're doing is we're connecting the entire supply chain through automated digital payments that gives suppliers and buyers better control over their cash flow. So at the end of the day, what we're trying to do is speed up the cash flow cycle through on-time payments and early payments for suppliers. That's been done in the past, but I think all 3 of us are here as financial technology solution providers that probably do what the banks have done in the past in a very complicated way. And we take that control, we put that control in the constituents of commerce, buyers and suppliers. We do that for 30,000 suppliers plus in 84 countries and 30 currencies around the world. So very much a global business. Prime Revenue is headquartered here in Atlanta, and we have operational centers in Hong Kong, Prague, and then we have additional offices in London and Australia and different places around the world to support all of our clients. And we're very proud to accelerate cash, put the cash in the hands of the suppliers, from large businesses to small companies around the world that are the lifeblood of commerce, help people to be able to move forward with their businesses.
Well, you also, I mean, I don't know if you didn't articulate or if I just missed it, but you kind of have this marketplace of sorts where the funder kind of sits in the middle, right? Explain to us how that works, how the funder comes in and helps with that, and how they benefit from what you've created.
So I think everybody's pretty familiar with the way that supply chains work. There's a physical movement of goods and services. Then there's going to be the documentary processes of sending the invoices between the supplier and the buyer of those goods and services. And that's where we come in. What we do is we facilitate on-time payments. We're one of the largest B2B payment networks in the world today. We'll facilitate about 1/3 of a trillion B2B payments. And as we continue to build out and expand that, we have about $1.5 trillion in spend under contract around the world. And so the first thing that we give the supplier is we give immediate visibility. And I think all of the panelists today, that's a big advantage. The supplier, when you sell a product, you know when it's going to be paid, how much is going to be paid, any credit memos or offsets that may be applied to that. So that's the first thing that we give to suppliers around the world. As soon as the invoice is approved, they see all of that. And then we give them the ability to be able to say, I want to get paid immediately for that invoice, or to set up a myriad of rules, business-based rules, to be able to make sure that they're managing their cash wherever they need their cash around the world by selling their invoices into a marketplace of 140 banks that we work with around the world, that's backed by about $45 billion in credit facilities that will purchase those invoices immediately, so that as soon as the suppliers ship it and the invoice is approved, they can get paid immediately. And you mentioned 30, 60 days. You know, the spend that we see, like 30, 60 days is wishful thinking. It's not unusual at all for suppliers, especially with very large companies, to have payment terms of 90, 120, 180, even 360 days. And you can't operate a business when that's the case. The buyers want to sync up payments with the inventory turns, and the suppliers want to get paid as soon as they deliver the product. And we stand in the middle and facilitate both being able to do that by creating a marketplace where banks will buy those invoices.
Yeah. Well, I mean, y'all are all mentioning how finance fits into and is part of the supply chain. We tend to talk about bottlenecks in terms of the physical infrastructure. The ports are clogged up. There's a ship in the Suez Canal that's, needs to be turned back right side up. There's lack of shipping containers, right? All of these things we keep talking about. But really, facilitating the financial part of it is actually, integrates with what's happening in the physical world. So, Robin, you're on the sort of last mile side of this in the U.S. Can you tell us what kind of volatility you're seeing, maybe in the trucking sector, in the warehousing sector, and how that's affecting your business right now?
Yeah, I mean, obviously, it is a very challenging market for people to be operating into. A large percentage of our customers are actually very much involved in food and cold storage, which has been just going bananas. Those warehouses are some of the highest velocity warehouses that exist. And obviously keeping America fed is a massive priority. So these folks are under tremendous political pressure and just social pressure to keep things running. And for them, the labor shortage that we're all experiencing is very, 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 very acute. And so I think it's been a plus and a minus for us in that, people are looking for any simple, easy ways that they can to automate business processes, facilitate greater efficiency. And certainly our platform does that both for sort of our end users that we kind of consider merchants accepting payments, as well as the drivers themselves. So we are creating efficiency, but it is a new thing that they have to acclimate to in this really very, very, very difficult environment to operate in.
For sure.
So I think that's what we're seeing. We're seeing it across the board. It's not like, there's some parts of the country where they're like, no, there's tons of people who want to work. Like it is a pretty acute shortage pretty much everywhere. That's just, that I think that's going to continue to drive, ultimately, I do believe it'll drive adoption of these technologies that create better efficiency. And it's just going to be necessary to be able to be a productive business in this environment.
Yeah, and both PJ and Jack, y'all talked about, Asia in particular, and how a lot of companies are sourcing from that region. And both of you talked about data, having data visibility, and how important that is for buyers and suppliers. But tell us what you're seeing in the data. I mean, I think one of the promising things about supply chain finance, and that's kind of how we framed this conversation in the title and in the description, is that it helps unlock growth that you may not have had otherwise because you're tied up waiting for your payment. You can't you can't fund your future growth if your capital's tied up. So what are y'all seeing in your platforms in terms of the volatility that we hear about in the supply chain? I mean, it's gone from, like I was saying earlier, it's gone from like a esoteric term to like a buzzword now. I mean, I was just reading the Wall Street Journal headline just a moment ago: supply chain crisis fuels latest retreat from globalization. And New York Times is talking about the supply chain being broken. I mean, are y'all seeing it being broken, or are y'all just seeing a strange aberration? PJ, maybe you start.
I would say it's far from broken. but it's not necessarily working the way that it was working pre-pandemic, is the way that I would describe it. I think volatility continues to be a bit of a watchword. The good news is, I think from a volume perspective, we compare our data to a leading indicator of macroeconomic. When you think about, we see the flow of money through supply chains before it shows up on GDP.
Right.
So, so that's one of the ways that we think about it. Supply chains are very healthy. We saw significant drop-offs in some market segments like automotive, as much as 90% of the volume of the flow of purchases within supply chains in 2020. That was the worst, obviously, was in Q2 of 2020. Q3 was a little better, Q4 was better, and then this year we've actually seen growth. So through the course of this year, we've seen a great deal of growth. From a volume perspective, what we're seeing on our platform, September, we were up 30% year over year, which is dramatically different. Some of that is what we would consider same store sales. So buyers, suppliers that were on the platform. A portion of that was new suppliers that were coming on. So we see supply chain finance being expanded beyond who used it historically into more suppliers within individual buyers that have already been providing it to a small segment. We also see new buyers coming on dramatically. So we see that growth very, very dramatically. There still is volatility. There still are challenges. I think one of the things that we're witnessing is the physical supply chains were so lean that when we had the disruptions, it takes quite a while to fix those disruptions. So you may only have a ship stuck in the Suez Canal for a couple of weeks, but it may take 4 or 5 months actually to work through that because of shortages. One aspect gets hit, like silicon chips in the automotive industry, you have to shut down an entire factory, and it takes a while to get those facilities back up and running. Most of our clients around the world are talking about rationalizing and re-engineering and not maybe being so single-threaded on either suppliers or regions, but we're not seeing that play out yet. We're seeing the planning of that process. So we're seeing volumes back. We're seeing prices going up in different places to be able to prioritize the supply. We're very happy that we seem to be back to growth, back to stabilization. The physical supply chains seem to be working the way that you would want them to at a macro level. On a micro level, we're still seeing a lot of volatility, so we can pick different segments and see that. But that's what we're witnessing at the moment.
Jack, are you still seeing that traditional kind of orientation, the West towards East Asia, like in terms of goods flow? Like, is that showing up in your data as well on the e-commerce side? It seems like there's probably more, at least at the beginning of the pandemic, there's a really quick switch to air freight, and people were like buying things and bringing them over as quickly as possible when it came to PPE and things like that. But do you have that level of visibility in your data, or is it more on the company sales level and the movement of product?
Sure. I think probably e-commerce businesses will prepare better than a lot of other sectors or are now. And the reason for that is when we first had those lockdowns back in March, April 2020, there was this crazy boom for all of our customers where they had their highest sales they've ever had by a long way. And what that meant was pretty much all of our customers ran out of stock. And when you run out of stock, you really start to feel the pain of leaving profit on the table. It's not a nice thing to have. And that probably led to a lot of them acting pretty quickly and, okay, we need to extend our supply chain, stock up. They always had very lean kind of supply chains, stock up ahead of time. And what we're seeing is typically it gets really busy for us around kind of August, September time coming into Q4. And that was just brought forward a few months where people were kind of looking for financing earlier, a couple months earlier, where really in May, June, it started kicking off and getting a bit earlier. So it's been busy and it's great. But as PJ touched on, I think what we're seeing now is when we have conversations with founders of the businesses, they're looking to become less reliant on one factory, one manufacturing facility. It hasn't happened yet because this is kind of the start of it, but I think I'll see businesses kind of set up second facilities in different places. And particularly LATAM and Mexico, I see a lot of businesses kind of looking at options there as well.
Yeah, and you know, e-commerce kind of faced a perfect storm, right? Like you had, you know, the rapid adoption of even the holdouts that were not necessarily on e-commerce, and even certain sectors or industries that were not really e-commerce oriented, like, you know, food delivery. Those things kind of came online very quickly. But then you also had at the same time running out of stock, supply chain shortages. How important has you know, your ability to help provide financing at speed really been to underpinning companies' growth at this time?
Yeah. So if you think about an e-commerce business, they could be doing 100 million in revenue and they may only have like 10, 12 staff. So they're really, really lean in terms of people. When you want to go get financing from a bank, whoever it may be, Wells Fargo, Chase, it's going to take a few months and a lot of preparation, data preparation, a lot of conversations. It's just a lot of time, to be perfectly honest with you. And they aren't necessarily willing to put that much time in because they're more interested in getting a business from 100 million to 200 million. And that's where not taking their time, not asking them for any data, but just plugging directly into their systems makes us a really attractive option, if that makes sense. They're actually willing to pay a little bit more for that speed than they would by going through a 4-month process with a bank. And I think that's just, in e-commerce with these small lean teams, it's just so important.
Yeah, and as a reminder, everyone who is on the call, if you have any questions, I would encourage you to go ahead and put those in the Q&A, so when we get to that segment, we can just jump right into it. So if something sparks a thought in your mind, just drop it in the Q&A section, and we will we'll get to those in about probably 10 minutes or so. We'll start those. So you know, we don't want to have crickets at the end. We know all of you have good questions for our panelists, so we want to make sure that we get those asked. Robin, I wanted to go back to you. You know, is it as simple as you're just streamlining the payments, or I'm sure there's much more that goes into it? And in payments, of course, we know that, you know, there's always the chicken and egg problem of adoption, right? Like you might have one customer who wants to pay a certain way, but it requires the merchant on the other end to have the infrastructure to be able to accept that payment. So how have you fixed that problem? And
Yeah. So, I mean, I guess the simplest way to think about how our business functions is it's sort of like a point of sale, or kind of a square for the merchants in the transportation industry. And so the way we've gone to market is by making sure that there is ample payment choice for basically lots of ways to pay. So we are enabling more ways to pay for our merchants. Like previously, maybe they only took checks, or maybe they only took cash. And now they take checks, cash, fuel cards, fleet checks. They might take credit cards, debit cards. And so they are able to really have a broad suite of solutions. And, you know, it's the same stuff that we saw in consumer payments. The more ways you offer to someone to make a payment, the easier it is to make that payment, and to make that payment quickly. And so that's a little bit of the value prop to our customers. And we have a philosophy of working with the stuff that's already out in the ecosystem. People have stuff in their wallets that they can pay with. It just might not work, or might not have the right workflow or tracking or, you know, auditing ability. And so that's really what we're doing. We're layering on that workflow and making sure that if a driver's employer needs to see that transaction, that they'll get instant visibility over it. And they can reimburse it, or they can advance the funds. And so that's how we've thought about it. But our system basically always works for, even if both ends of the transaction don't have our platform, transactions can still be completed. We make sure that it always goes through. But it works better if both folks have our platform. They'll have, you know, better visibility. They'll have transaction history. It goes faster. So that's how we've really designed the product. And it's because this industry is so fragmented, right? Like you weren't going to be able to get everybody on this thing in a closed loop way instantaneously. And so, I mean, just think about, I mean, there's, you know, I think a million different carriers and trucking companies in the United States, and they fail and form on a regular basis. And so you really need to sort of understand that when you're dealing with the transportation industry in the United States, it's a very, very fragmented customer base for us.
Yeah. Do y'all see, I mean, Jack, you sort of touched on this, but do y'all see a particular need for small to medium-sized companies to start thinking about this as part of their go global kind of strategy? I mean, it seems like, you know, the bigger companies, it's one thing to have them on the Prime Revenue platform and being, you know, funding and buying and selling, but it seems to me that if you're any small to medium-sized exporter, or someone sourcing from abroad, that you would need to be thinking about these things in a different way than if you were, you know, thinking about the traditional modes like Jack talked about, like, I mean, getting a letter of credit and that kind of thing that to fund your export sales and your other, you know, mainstream or traditional forms of finance. Is it kind of a new frontier out there? Like, in order to compete, you really need to be thinking about these kinds of solutions. I don't know who wants to take that. Maybe Jack first, and then PJ.
Yeah, sure. So we work with a lot of businesses pretty early. Businesses, consumer product companies tend to start online in their local region. So they might start here in North America or in Europe to kick off. And when you do that, you've one warehouse and you're reasonably lean in your supply chain. The next step tends to be, okay, you started in Europe, now you're moving into America, you have 2 warehouses. Now all of a sudden that working capital needs increasing. Then you tend to move towards Amazon, Etsy. Now you need to put product into Amazon's warehouses. Now you're going to start to grow again, going to move to retail, start doing some wholesale. Now you're not getting paid up front from consumers directly online. You're getting paid 60, 90 days later. And so I think as the businesses in e-com grow, your working capital cycle goes from being very nice, where your customers are paying you up front immediately, you're collecting on them, and you've one warehouse, to going, oh crap, now I'm not necessarily getting paid up front. I have to have multiple warehouses. It becomes a lot harder. And that's where the need for financing grows. And e-com businesses grow pretty quick these days. With businesses that started 18 months ago that are doing 18 million a month now in sales. And they can really, really grow quickly. And that's again why it's been so busy for us, I would say. We're only around 2 years and still seeing growth of like 50% month on month there, even though we've gotten quite big. So hopefully that will continue.
Yeah, PJ, do you see companies getting involved on your platform earlier in their process than they may have before?
We you know, one of the ways to think about our business is we're a multi-sided network for the technology that brings together buyers that are purchasing goods and services, suppliers or sellers of those goods and services, and then a global financial market made up of banks and hedge funds and capital markets that are very interested in purchasing the invoices from those suppliers, which are guaranteed payments from the buyers that have already been approved and are going to be paid, and the supplier. One of the things that we're definitely seeing is earlier access by the suppliers on the platform. We don't necessarily work with the smaller buyer, with smaller buyers, the way that Jack is describing it. But many of our buyers have specific programs. Because when you think about our client list, you know, our clients are the biggest brand names around the world. And, you know, when we started the business, our primary go-to-market strategy was go get the Global 2000. And then we've sort of expanded down into you know, sort of mid-market enterprise type businesses. So we really sort of focus on businesses that are about $250 million in revenue and up. So sort of graduating out of the cohort of Jack's clients that we would be dealing with. But on the supplier side, we see a lot of the biggest businesses in the world that are really starting to take focus on not only small businesses, but maybe minority-owned, Black businesses, women-owned businesses, et cetera. We see a lot of rewarding of financing, you know, for ESG types of initiatives, sustainability, environmental types of initiatives. And that can be the lifeblood of a business that's going through the type of growth that Jack's talking about, because, you know, the vast majority of the business of jobs around the world are created by small businesses that have 50 employees or less. That's where the job engine of the economies around the world are. But they have less access to credit. It's cost them more if they can get it. And if you're dealing with some of the biggest brand name clients around the world, Keurig, Dr. Pepper, Michelin, Sainsbury's in the UK, you're dealing, you know, they get financing at an unlimited amount virtually. and they also get it at the cost that countries get. And if
Yeah.
they can deploy that cash into their supply chains and accelerate the cash conversion cycle for those smaller suppliers, the suppliers are getting access to capital that they've already earned. They've already earned the money. They've shipped the products, they've sent the invoices have been approved. Why should they have to wait for 6 months to get paid? They can accelerate that payment immediately at incredibly efficient cost of capital, the cost of capital of the biggest, most creditworthy businesses around the world, and immediately take that money, that cash, and pour it back into their business to buy more inventory, grow more jobs, expand into the facilities as Jack was just describing, and ultimately grow jobs and make the world a better place. And that's what happens. Cash is king in the business, and you can't do that with receivables. You can't do that with payables, but you can do that with cash.
Great. Well, we had one question from the cyber team, and it actually corresponds with one of the questions I was going to ask. One of the reasons I sort of ideated or whatever this event was that the GSU, Georgia State University Masters of International Business at the Robinson College, they have a supply chain focus and an entrepreneurship track that they have just started. And I was going to ask each of you, how would you counsel, and we have, the cyber network represented on this call, so a lot of institutions from around the world. How would you counsel educators to prepare, business leaders of the future coming out, having this kind of global bent, but needing to know really what's happening in the supply chain in order to function? And I think the specific question from cyber was, what kind of employees do you want to hire? What are you looking to hire? And how can the GSU-MIB, Masters of International Business, fit your needs?
I'd be happy to dive in there, because we are looking to hire a ton of people in every single role. So just in general, I mean, most of our recent round that we raised has been focused on pretty dramatic sales expansion. So we are hiring sales teams, entry level sales folks from an entry level all the way up. We also are very much expanding in terms of product and engineering, because we are moving from sort of a single product, this sort of point of sale solution for our merchants, to other solutions like financing, invoicing, and really becoming a full suite of back office solutions for, basically being their financial tech stack for a logistics business is really what we aspire to be. So we're hiring tons of folks in those different buckets. What we look for in the people is just, I think Atlanta is getting a lot better, but Atlanta has not historically had a lot of people who've had startup experience. And so, it's difficult to take someone who's been in a major Fortune 500 company and bring them into a startup and have them comfortable with the ambiguity, the pace, quite frankly, the chaos, and really understand that they don't have a structured role, that their role is to create value and to just step into the white space. And so that's what we're really looking for. We're looking for people who are ambitious, driven, and are thoughtful problem solvers, and just are like super excited about creating something. And so I think that's, kind of making sure that people understand the difference between like an entrepreneurial startup experience versus a corporate experience, I think is super important. Because if you're kind of looking for it shaped for you, then, my world is going to not be for you. Yeah,
I hear that. So Jack and PJ, I kind of want to rephrase it a little bit. Since we're talking about international business masters, do you feel that there are certain things where, maybe this is a touchy way to ask it, but are there certain ways that the academy is not really preparing people for the real world of international business? Is that maybe PJ? I don't know if you want to take that one.
Yeah, I think I'm going to jump back to a comment that Jack made a little while ago when he was talking about the growth of his business and what he saw with the e-commerces. The e-commerce businesses that he serves, they were able to pivot really quickly. And I can tell you the same thing. We can almost break down the 30,000 plus clients that we have on our platform in a very similar way. The e-commerce businesses are going to be more entrepreneurial. They're going to be thinking more about how to make changes. They're going to be very open-minded. There's no borders on when you're thinking about e-commerce. There may be regulations that you have to figure out, but it's a global business. The world is very small. And I would sort of take that and expand on it just a bit. When we look back at our businesses on our platform that are doing really, really well, and the ones that are struggling mightily, and we have both ends of that spectrum. The ones that are doing very well today and that are growing very well today and have EBITDA margins well beyond what they would have anticipated was even possible, 24 months ago, they're the ones that were very aggressive in dealing with the pandemic. They went into the pandemic with the mindset of, we've got to be entrepreneurial. I don't know what's happening, but our business is going to perform very differently than it's performed in the past. We have to be very communicative with our employees. We have to be, at Prime Revenue, we talk about smart, hungry, and humble. We got to work collaboratively. We don't know what's going to happen, so we need to talk about that within the market and figure all those things out. Those businesses are doing incredibly well. The businesses that hunkered down and said, like, we just need to get through this and it'll go back to normal, those are the businesses that are really struggling. So I think when I think about, what can an international focused MBA do with entrepreneurship, like what I just described and what Robin just described is entrepreneurship. Entrepreneurship, you show up and like you do what you have to do to make the team successful, and everybody's focused on the team. And it's not about systems and it's not about processes. It's about being focused and committed to the vision, focused and committed to the team, exceptional collaboration, exceptional communication. And the world is a really small place. It's not going to get smaller. Like, we're not going to close the borders down. We're not going to go back to just US focused manufacturing and everything existing here. It's just going to get, smaller and it's going to get faster. And that has to be the mentality that we all sort of take into the workplace of the future. And so my thought is the better we can prepare students for that type of volatility and accountability and contribution, the better and faster we're going to be able to take advantage of the opportunities and fulfill our potential as individuals and businesses in the future.
Well, yeah, I think I heard you there say it doesn't sound like you believe globalization is in retreat. It's more of in reform or in a mode of change, and that we just need to be able to deal with the change more quickly and more flexibly.
Absolutely.
So, Jack, did you want to add anything to that? I mean, you're building a team across cultures, really. I mean, you're coming in from Ireland. You've hired local head of sales for the U.S. market, I know. But how are you handling that in your operations internally?
Yeah, it has been fun coming over and setting up an office here. I can tell you, when we went looking over here, we decided we want to find a US head of sales first, and there's actually quite a lot of sales talent here. I think our top 3 candidates were all based in Atlanta randomly, and prior to that, we hadn't necessarily looked at Atlanta as being that's where we'll set up, and this is where we are. It's great. The city's pretty vibrant. You can feel it's been growing over the last few years, and that's continuing. Going back to, I think we're all going to say the same thing here when we're thinking about what we're looking for in a candidate. We've hired about 50 people now here, outgrowing the office already, which is nice. But there's 2 things really that I look for. One is most of the people are pretty ambitious, and that means they work hard, and work tends to be a reasonably big part of their life. And that's one thing we definitely look for. You need that in a young company because it's just so busy. You can't hire fast enough, unfortunately. And the other thing that's very, very different, I've worked in a PwC before, and it drove me insane, is this feeling of ownership. Like, you don't have anyone to report to. Like, you don't have anyone to tell you what to do. Like, if it's your area, like, best, make the decision. I trust you. And it comes back to that. And
hire
if you
with the trust in mind, instead of micromanaging.
And if you don't
have time,
you don't have time. I mean, I don't have time to talk to half of the people. You just trust them to know what they're doing. And when I am looking at people, probably looking at people who've seen a lot. The more you've seen tends to mean you tend to know what good is and what bad is, and it helps. But they're the main 2 things I'd say.
Great. Well, we've got some questions coming in from the Q&A, and also some interesting chats going on in the chat function. So I'm going to ask, I think this is for Robin. With the demand for more capacity and the high capital expense of asset-based trucking, how are you finding your services helping small businesses, A, stay afloat, and B, expand and grow?
Yeah, so obviously one of the challenges for truckers is cash flow management, right? And trucking businesses of all sizes struggle with that. And so the fact that they actually rather cynically, especially some of these smaller trucking companies, believe there's a lot of documentation that is required for a trucking company to get paid for a shipment. And the shippers will sometimes, and brokers will often require different types of documentation. And so you may have to supply different documentation to get paid from a Walmart versus a Campbell's Soup or, a Nestle or anybody else. And so understanding that and having the right set of documents and having them be compliant is a major challenge. If you're a little trucker, how the heck are you going to do that? Like, you just have like wads of paper. And so a lot of the cash flow problems they have or challenges they have are because they can't navigate the business processes around submitting expenses to get paid.
Can I ask you one clarifying thing?
Yep.
Tell us about how decentralized the trucking industry is and like how it's kind of made up. Because I'm actually writing a story right now about immigrant truckers, so this is kind of right top of mind for me. But it seems to me you have the big guys, then you have like the dispatchers, then you have the drivers themselves that are also truck owners, operators. So it seems like it's only getting more fragmented.
It really is. I mean, and part of it I think is so I guess just to start structurally, trucking companies are by and large pretty small. I think the stat is something like 90 to 95% of them have 20 or fewer trucks in the United States. So very, very small. To create a trucking business, you just have to buy a truck and get and be licensed. And so it's pretty easy for a business to be started. And a lot of truckers will work for a bigger company like JB Hunt, and then they'll want to go and start their own business. And so there's a large percentage of the market or owner operators who basically is a guy or a couple guys in their truck. And it could be up to I think I've seen stats, it's around 30%. It might be a little higher than that. And so trucking companies can be all different sizes, or they also can contract out to these smaller truckers. And it leads to a very, 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 very fragmented market, which I think is great. Like new business formation is great. It's giving folks a chance to sort of have more control over their schedule and their livelihood. It's also very consistent with what I personally think is the ethos in the industry, which is kind of maverick. Like a trucker might spend 200 to 250 days a year in their cab. So they must like being by themselves on the open road. There's a little bit of a attitude about it being independent. So I think that leads itself to this high and structurally to having all these owner operators. That's how the industry is shaped up, which is shocking given how much is moved in the United States. I think the big trucking companies, nobody has more than single low digit market share.
Wow, amazing.
Yeah.
So this is a really interesting question from Kevin O'Neill in the chat. With blockchain finding its way into supply chain management more, what impact do you think smart contracts, I'm not sure what that means, but I'm assuming people that are smarter than me will know what smart contracts are, smart contracts have on financial settlements among various shippers? Will this accelerate settlement, improve cash flow for smaller shippers? Anybody want to take that? Blockchain?
So
as part of settlement?
I can address that a little bit, or at least provide a little bit of perspective. If you have a little bit of time and you're interested in how blockchain can have an impact on supply chains, just Google the Port of Rotterdam blockchain project that they have. And the Port of Rotterdam, in cooperation with the University of Rotterdam in the Netherlands, implemented a physical checks and balances with smart contracts on blockchain, using blockchain and using IoT devices like an IoT lock on a container. And the smart contract allows documents to be processed. And just like trucks will require a ton of documentation, shipping a container into a port across borders requires all of that paperwork as well. And it can be very complicated. And there's going to be freight forwarding documents, and there's multiple parties. And as those multiple parties approve and submit the documents, those documents can go into a consolidated distributed ledger with smart contracts. And the smart contract knows I've got to have all of these before I can enable my lock to be unlocked, so that the receiver of that container can do that. Now, one of the ways that can have an impact is it can actually take a lot of that checking and the delays of shipping products out of the hands of a receiving clerk that's trying to collect all of those carbon copies and pieces of paper and everything else and make it faster. The faster the products can move, the faster that the raw materials and the work in process can get to the assembly plant to be able to put the final products together, to be able to make it to consumers that can purchase the end products. That is an example of how things can speed up through the physical supply chain, and speeding things up through the physical supply chain makes it easier to approve invoices to get cash into the hands of the people that shipped the product originally, which means the faster that they can get access to their cash, the faster that they can be able to invest back into their business to open more facilities, to expand by hiring salespeople all over the world, to be able to buy more products and services, to assemble and make that their product that they will ship on to their business clients. That's one example I think that we're seeing today that's in pilot, and as those types of pilots have success, we're going to see those types of solutions more widely deployed around the world.
Do y'all, I mean, you mentioned 30 currencies, I think, PJ. I'm curious, do you see more settlement in local currencies, and do you see crypto being used for cross-border payments at all?
We're in the early days. I would still say that crypto and blockchain, in terms of massive deployment in B2B financial supply chains, is not widely deployed. There are a number of pilots. I think, there still are tremendous regulatory compliance issues in jurisdictions around the world that buyers, large companies in particular, our average client is over $1 billion in revenue at the buyer level. And they're very worried about currencies. Their processes are very automated, but we're starting to see the smaller clients pilot. You're seeing a number of banks that are piloting the B2B payments on the lower end of the spectrum. I think when it becomes more pervasive in the consumer space, and the CEOs and the CFOs of the largest companies in the world are used to handling crypto on their wallet, on their phone, it's more likely to be deployed through B2B, but it's still early days in most B2B payments.
It seems to me that it has a lot of promise in supply chain because of the lack of hurdles or friction that if you did it right, you could cut out a lot of intermediaries. Jack, do you see more sales being done in cryptocurrencies? I'm kind of curious, and how do you evaluate that if you're looking at the sales and marketing platform?
Yeah, not really, to be perfectly honest with you.
Good.
I think if e-commerce businesses are accepting crypto, it's probably more a marketing novelty play than it is a real settlement type currency.
Interesting.
It's just too volatile still, I think, and people don't like having their business revenues moving based on volatility and crypto. So,
well, we've got. Thank you. Sorry to cut you off there. We have two related questions for PJ. I'm gonna try to combine into one. So basically, what kind of strain and what kind of risk does prime revenue incur from how do you deal with the risk of non-payment? And then what kind of risk do you incur for the extended costs of the money that supply chain backlogs bring into the trade situation? And how do you hedge against these risks?
So the first answer is we don't take risk. We don't have balance sheet. We're not a bank and we're not a lender. We're the technology platform that brings together the buyers, the suppliers, and the banks. And we take those off of documentary processes and manual processes, and we digitize all of the information flow that's occurring and provide transparency and visibility to all of those parties. So the first way that we hedge the risk is we take all of the platforms that are out there today, we digitize them and give everybody that visibility. Our default rate is insanely low. It's exceptionally low. We process millions and millions and millions of invoices sometimes on a daily basis, but certainly on a weekly basis. And the number of defaults that we've seen over the history of the company can be counted on fingers and toes in terms of the number of invoices. And part of that is just trade, right? That the risk for corporates Trade payables is the last thing that's not paid. If you don't pay your suppliers, you don't have product to be able to generate revenue. So the risk is already exceptionally low. And then the way that prime revenue works is we are effectively receiving power of attorney to move the money. So we're dealing predominantly with invoices that have already been approved. We're the method of payment. We have power of attorney over moving the money. So these things help to isolate the risk that the funders would take. And then in today's world, the reality is if there is default, the connectivity and the legal contracts that exist make collection of those very easily, assuming that there's not a catastrophic default of a business. And that has occurred very seldom in the history of the world. It does occur, but if a company is going to catastrophically fail, you typically have warning signs. And we collect all of that data to be able to provide to the financial institutions that are going to purchase the invoices to make them aware of the financial health of the buyers and the suppliers on the platform.
Well, I think that that's interesting that you mentioned the low risk of non-payment in trade payments and invoice payment. And I think when you're saying trade there, you mean like actually like physical commerce, not necessarily cross-border, but I think it kind of goes hand in hand. And I guess so. The last question for very quickly. Do y'all, I mean, when do we see supply chain wrinkles start to be ironed out and start getting back to quote unquote normal, or will we ever see another normal? And that's going to be my last question, and I'm going to turn it back over to CIBER. Anyone who wants to take that?
My 30-second answer is we are supply chain, physical supply chain, and financial supply chain is a fantastic place to be for the next 10 or 15 years. There will be a re-engineering of most of the global supply chains. Globalization is absolutely not dead. Nobody is going to go back to an isolationist, regardless of the extremes on whatever party you're in that may want to close down the global economy. It's not going to happen. And so the lessons, I spent the first 2/3 of my career in physical supply chain, being a good industrial engineer from Georgia Tech here in Atlanta, and taking all of the fat out of every supply chain physically that you possibly could, lean, just in time, all of that. And then we hit the pandemic and we had all this volatility. And we found out that all of the work that had been done for 30 years to make the supply chains lean, has problems associated with it. So it's going to take 10 or 15 years to sort of re-engineer and redesign the supply chains, physical supply chains and financial supply chains. So it's an exciting time to be doing what we're doing, and I don't think it's going to stop for a decade or more.
Yeah, we need a little fat to get through the winter sometimes. And tell me, Jack and Robin, do y'all have any final thoughts on that?
Yeah, I mean, I couldn't have said it better than what PJ did, but there is no going back to normal, right? I mean, this is the new world, right? We're going to continue to have these types of disruptions with weather, with, global pandemic, political disruptions. This is our new world. And so to PJ's point, this is a great place to be. And I think it's going to be a wild ride for the next decade or so.
And it's a great city to be in this industry as well, Jack.
I couldn't agree more with PJ and Robin, and it's been great to come here to Atlanta, but I think it takes a long time. All of our customers pretty much buy their product from China, and it's going to take a long time for new countries to really catch up with the manufacturing capabilities that are down there. So if you're expecting things to change drastically or quickly, it's probably not going to happen.
Yeah, the inertia of those inbuilt supply chains within industries in China is going to take a long time to unravel. I think you're right. Leanne, take us out. Thank you so much for hosting at CIBER, and I'll say goodbye from the Global Atlanta perspective. We really appreciate you working with us and being a partner.
Thank you, Trevor, Robin, PJ, and Jack for fantastic conversations and really deep and rich insights. I know the recording of this webinar will be required viewing for all of our MIB students who are studying global logistics and entrepreneurship. Your messages are truly inspiring and encouraging. And thank you everyone for coming to this webinar. Just a quick reminder to please complete our short survey as you leave. And we have more webinars coming up. Hope to see you then. Bye everyone for now.